All right, so the income biweekly being 2,700, it just goes into this account because you have a little bit of cash flow and it's still going to sit in this account. Every time you put in the income, that will stay in here. Then you'll just pay out your regular expenses. Is this PLOC linked to your checking account?
It's currently not. What I decided to do was I had my income going to another account, another credit union altogether. So what decided to do was to start having my income go to the credit union that actually has the PLOC because that makes it easier for me.
Yes, very easy. Okay,
Yeah.
so your question was, how do I make payments into the PLOC and take care of my expenses when I'm paid bi-weekly? And this is how you would do it, is every time you get paid, your income goes into this account. Have that link between your checking account and your PLOC. You still have to manually transfer any income that you get into the PLOC. They will not do an automatic transfer. So what I do still to this day is if I have a balance on any line of credit, and I was going to say, even if I don't have a balance on a line of credit, I still go into my checking account every day and I see what is in there. Like just earlier, I had, I think it was $22.60 because when I have income come in, my expenses automatically come in as well. And if there's any money in the checking account, it will be taken out of that money in the checking account first. So obviously I had that happen this morning. I had $22 in there. So I went in and transferred the $22 into my HELOC, which had a balance of $561. So my idea is if I'm not transferring any monies left in the checking account to a line of credit, and say I had a zero balance on the HELOC today, I would have transferred it into my savings account so that I'm at least drawing some money or interest off of my money and it's not just sitting in a checking account. Now, just let me continue that by saying if I have a lot of money sitting in a savings account, even a bank's savings account, I get other funds ready to transfer that money into. So I'm always putting the money where it's serving me in the best way possible. The best way possible is to get it into a line of credit. So you stop this 12% interest. The next best way when you don't have a line of credit is to get into infinite policies or some kind of investment that's drawing, at least 5% compound interest or, 12% simple interest, just as long as you're drawing something off of that money all the time. That has nothing to do with what you asked, but I just wanted to throw that in there because my accounts are a little different now that I don't have outstanding debt that's just sucking the interest out of my life. I now have turned it around to where my income gains interest. So I'm always making sure, even though I don't have debt to be throwing money into, I have to still be aware that I don't want it sitting in a checking account where it's doing absolutely nothing. Okay.
Right.
That being said, with your situation, you're going to be transferring all of your income into this line whenever you're paid. And since you have that link to the checking account, anything that comes into your checking account to be paid will automatically transfer out of this line back into the checking to take care of that item. Now, does that make sense?
It does, because currently the credit union that I have the PLOC with, I don't have a checking account open. So I may have to open a checking account.
Yeah, definitely do that. Ask them to link it, which they should, and then you'll have that automatic setup for your expenses. Okay, so I realize that you don't have much of a balance in this or much availability in this line of credit yet. So the next thing I think that we should talk about is how are you going to start working to get this balance down so that you can start pulling more debt into this line, gaining more cash flow. Because according to your worksheet, you have currently about $387 in cash flow. When you start using this line right, with the income going in, you're going to gain that $369 that you're paying out right now to it as cash flow. So now you're going to have about $700 in cash flow. That's pretty good because this account is now going to be working down about $700 a month, which means that you are able to start grabbing some of maybe the credit card debt or the personal loans down here. For example, if you paid off the Upstart loan today and then gained that $39 that you're paying there, that would be an option just to get rid of one of your payments. When you work this down about 3 months, you would be able to pick up even Home Depot, for example, or actually Affirm is your most expensive at $309 with that $2,600 balance. You kind of just look at your numbers and what has the lowest balance but the highest cash flow that you can gain if you transfer it into the line. That's the way your mind needs to work. Does that make sense?
So you said the lowest balance and the highest payment for
Yes.
cash flow, because the payment will be in the will actually go into the cash flow once it's paid off, right?
So let's say that you work this down for about 6 months and you have the 2,600 to pay off that Affirm. You don't have an interest rate on that. What is your interest, or is it zero?
No, that's 31. So what I did, I lumped it together. I didn't realize I was supposed to break them out. So it's actually 3 Affirm balances. The
Okay.
highest one is 1,400, and that's at the 1,400 is at 31.41%.
Wow. And what's your payment on that?
So that's $200.03 a month.
So for example, then on this account, if you're gaining $700 in cash flow a month, then you should have 1,400 in less than 3 months. But in your third month, you might want to pick this up and gain that $200 payment as cash flow. So now you have $900 in cash flow that's helping you to work this account back down.
Okay.
So if you're looking at it from a cash flow perspective, that would mean you've paid off the 1,400 in 2.5 months because you've got, 2 months, less than 2 months, because you've got 900 in cash flow after you pay that off. So that's how debt is eliminated so quickly, rather than you making a $200 payment on this, which is going to take you over 7 months. If you transfer it into the line, your new cash flow will now consider this gone in, less than 2 months. Does that make sense?
It does. But
Okay.
with that scenario that you have on the board, does that take into consideration the expenses? Well, like you said, I think you said in one of your videos that the expenses kind of trickle out depending on the day, right?
Yes.
Okay.
So yeah, so you have about $3,100 in expenses on just paying debt payments. So let's just run this exactly the way it's going to look. Let's see, you have a couple of options. Let's go ahead and finish with this because this is where you're at today. So you could at least be working on this.
Right.
When you're biweekly, let's say, like you said, those expenses are going to trickle out. What that means is that as this balance comes down throughout the months, you're going to have room that you don't worry about when the expenses come out. You're just worried about getting your income in here because you know you have sufficient income that's going to cover those expenses as they come out. If your money is in this line, you don't care what date your expenses come out because you've got the money in there and it's covering them. And then you're going to do another deposit here in a couple of weeks. So do you see where I'm going with that?
I see where you're going, but I think the little apprehension that I have in my head is, oh, I'm going to be late with the life insurance premium, or I'm going to be late with the BG&E. So that's where my mind is.
Well, you can't be late because when, let's say you get paid today and you put the money in here, $2,700 is sitting in here.
Right.
And you have about 300, I think it was, that's available, right? 500 available approximately. So you're now going to have over $3,000 just here. You're not going to have $3,000 come out in the next 2 weeks because you are going to have another deposit go in of $2,700 in 2 weeks again. So this is going to stay ahead of any expenses that you have coming out. The apprehension will go away. It takes you about 3 months to get really comfortable with using these lines of credit.
Okay.
So if I were you, I would focus only on getting everything set up to automatically come out of that new checking you're getting ready to get. When they have that link set up to where everything will automatically flow out of here, you're just going to write checks or, have everything come out of that checking account, which will automatically come out of this line of credit when it's set up correctly. Meaning that you're not even thinking about what dates things are coming out because your money is already sitting in here taking care of it.